Okay, in this module we will discuss how to complete the VAT return. The first thing one must do is to log into the FTA's portal where the VAT return is available. This can be done by typing in to Google or Bing VAT UAE FTA login, for example, and make sure you're entering into the domain which is set by the FTA. Here we are going onto the website, which is eservices.tax.gov.ae, and it will provide us with the login information. Here you shall enter the login details that you had used when you were registering for VAT. This is normally one per company, but an agent may also have login details for the same VAT registered company. So here I would enter the details, the email address as well as a password, and then you should also enter into this security code here, which auto generates every time you log in. Once that's entered, you press login. Now I've done this on a previous occasion, and the screen shall look like this then. Here I've blocked out one of the client's VAT returns, but this is essentially how the dashboard would look. The dashboard is the first place you shall enter into the registration. Now remember, this portal is designed for all taxes. Clearly at the moment in the UAE, we only have VAT operating as well as excise tax. Excise tax only applies on certain goods, and unless you are an importer of those goods, then excise tax shall not really apply. For the purposes of this exercise, we shall concentrate only on the VAT. The VAT block, which is the first tablet here, tells us about the status of the VAT registration. It gives us availability of the VAT registration certificate, should you need to provide that to any of the authorities or any of your suppliers or customers. And it gives us some general information such as when the first VAT return is due, as well as when the next VAT returns shall be due and the periods that are applicable. So here with this client, their VAT return stagger dates, and the stagger being the VAT return periods, are as follows. The 1st of March to 31st of May is the first period. Second period is the 1st of June to 31st of August. The third period is the 1st of September to 30th of November. And then the fourth period is the 1st of December to the 29th or 29th of February. These shall remain fixed every year, unless there is a change which has been dictated by the FTA. Now remember, some registrations shall be on a monthly basis, so every month a VAT return shall be filed. However, some registrations shall be on a quarterly basis and filed on a quarterly basis. Such as this client is on a quarterly basis. If it was in a VAT group or a tax group, then it should be shown here as well, and details should be provided of all the various members or entities within that tax group which all share the same VAT number. With this particular registrant, they are not in a tax group, so hence it is left blank. However, if we did want to apply, we would just click here and enter all the necessary information as requested by the FTA. On the top, we have the legal entity that is registered for VAT, as well as the legal entity's name in Arabic here. The first place to go in order to complete the VAT return is to go into the VAT tab as such. Once you click on it, the VAT return that is due shall open up. We will then click on VAT Returns tab, and here it shows that there is nothing due at this period, but shows all the historical information of all the completed VAT. Here it shows all the historical information of all the VAT returns that have been completed. The form we should enter, the form that we need to enter is called the VAT 201 VAT return. All these other forms have purposes, but this shall be covered in other modules. One important one that you may need, which is related to the VAT return, is the VAT 211, which is for voluntary disclosures where errors have been identified and are above a certain threshold. This only needs to be completed when errors have been identified and need to be disclosed to the FTA via a separate manner, which cannot be included onto the VAT return. Here now we shall enter into a VAT. So here we have entered into a typical VAT return. Although this one is completed, it follows the exact same nature. First, the basic information is provided at the top, which is the tax registration number of the entity you are filing the VAT return for. The legal name of the entity is provided in English as well as Arabic. Again, it's good to double check to ensure that you're providing or completing the VAT return for the correct entity and it matches the tax registration number. The address here is also stated of the registered address is information essential to the VAT return. The first being the VAT return period. This is a key part of the VAT return because it tells us what the period is for which we are filing. All those transactions which have a data supply or tax point which fell under this period shall be reported on this particular VAT return. The tax year end just confirms when the tax year end confirms when the year end of the VAT return has completed. This is normally important for the purposes of partial exemption and making adjusting balances or the wash-up calculation. These essential information are auto-completed and one does not need to enter it. The FTA knows what to expect and it knows the periods that you are filing for, and so you should ensure that you are filing for the correct period and including those transactions which have a tax point within those periods. Here we are then informed of what the VAT return due date is. This is normally 28 days after the VAT return period has ended. And of course, if it falls on a weekend, then it is slightly extended. So here in this particular scenario, 30th December 2018 is the date by which the VAT return must be filed and payment should also reach the FTA. The VAT return period reference number relates to the VAT return you are completing and is the reference that shall be used to inform the FTA, and the VAT return period reference number is the one. Can you? Huh? I'm freaking recording, man. The VAT return period reference number is also a short way of referencing which VAT return period one is referring to. So here, this is 03/2019, which tells us that this is the third VAT return being completed and falls within 2019. This is good for accounting records and when saving within your filing records. Now we come on to the main part of the VAT return. The first section relates to all the sales made by the entity within the VAT return period that we are concerned with. VAT on sales. VAT on sales clearly would indicate that this is where the output tax is due. In the United Arab Emirates, there is a requirement to report by emirate. So here all 7 emirates are listed and all the sales that have been made from within those territories or states should be reported within their relevant rows. With this particular client, their transactions have only come out of their Dubai office, as this is the only place they have a fixed establishment. However, had they had establishments within Abu Dhabi, Sharjah, etc., and sales were made out of those offices or shops or warehouses, etc., then those sales figures must be reported within these rows. Since the fixed establishment was only in Dubai and the sales were made out of this fixed establishment, we are only completing the first row. With this particular entity, the sales and all sales have to be reported in AED, even if they were invoiced in a different currency. They must be converted back into AED using a suitable means of currency conversion. The first column is where the net sales are recorded. The net sales being the sales figures excluding VAT. These are all standard rated supplies. So these are supplies where 5% VAT has been charged to customers within the United Arab Emirates. The sales have been executed from within those territories. The net figure shall go in the first column, excluding VAT. The relevant VAT amount, which is 5% of the net amount, shall be reported in the second column under VAT amount, again expressed in AEDs. The last column is for use to make adjustments required to the output tax as a result of adjustments made to bad debts or relating to real estate supplies. All the amounts entered into this column must be ensured to not be negative. And again, they need to be referenced by each emirate, and only the relevant output tax figure should be entered into this column. And also any real estate adjustments that need to be made should also be entered within this column. Nothing else should be entered into this column, as this could trigger an audit or questioning from the FTA. Once these rows have been completed by emirate for all the standard rated supplies, we can move on to number 2. Number 2 refers to tax refunds that have been provided to tourists under the tax refund for tourist scheme. So box 2 requires the entity, particularly those who are in the retail environment, to include all the value of tax refunds that they are provided to tourists under the tax refunds for tourist scheme. So only those entities which are retailers and provide tax refunds to tourists in the UAE, which have been directed by the official tourist refund scheme, should be using this. Again, the amounts reported in this box should always be negative. A negative figure will appear and will reduce the output tax figure, as this has been paid out to those customers. Moving to number 3, it states supplies subject to the reverse charge provisions. These are those reverse charges which have come as a result of importing services into the United Arab Emirates, where the place of supply is the United Arab Emirates. As you would know, under the reverse charge, the registrant is required to self-account for the VAT. With this particular transaction, assuming it has been made by a UK consultant and provided to the client, which is based in the UAE, the value of the service was 2,200, excluding VAT. As the UK registrant did not charge VAT as they are not registered in the UAE, VAT has to be self-accounted for. 5% of the 2,200 dirhams that was charged have been included within this row, row 3. The VAT amount which applies to that is 110 dirhams and has therefore been included within the VAT column. So these all relate to services that have come into the United Arab Emirates, where the place of supply is the UAE. Number 4 is zero-rated supplies. However, note that although this 110 has not been paid out to the client, it shall be due to the FTA. However, although this 110 has not been paid out to the supplier, this is due to the FTA. But normally, you would expect a fully taxable business, where it relates to full taxable supplies, should be able to recover this, and the corresponding amount shall go in the purchases box, as we'll discuss later. Row number 4, zero-rated supplies. Zero-rated supplies. For entities that are supplying zero-rated supplies, where they do not need to charge VAT on those particular supplies, they need to state the value of those supplies made within the period, which have 0% VAT included on those. This would include supplies relating to the exports of goods and services outside the UAE. This is because they take zero-rated liability. This is because they take the zero-rated treatment. This will also apply to local supplies of certain educational services, certain goods and services, and also those relating to particular healthcare services, as well as the supplies or imports of investment, precious metals, and crude and oil and natural gas. So if the entity is performing any of those particular supplies, then it should be recorded here as 0 rated. And of course, the VAT column shall be blocked out because there is no VAT corresponding to this. Only the net amount shall be included here. Exempt supplies. This mainly relates to those within the real estate sector and those within the financial services sector. So any exempt supplies made within the period should be reported here. Again, there is no VAT corresponding to it, so therefore only the net amount is included. Number 6. This is quite an important section and can apply to many of the manufacturers and retailers out there. Goods imported into the UAE shall come normally through the customs authorities. The customs authority would normally have the customs number linked to a VAT registration number of the particular importer. Where goods have come in and the customs number is linked to a VAT registration number, goods shall be automatically cleared and sent through, and the corresponding VAT amount that is due on those imports shall be calculated based on the clearing documents and reported here. This is auto-populated by the system. With this particular client, because they have made no importations within the period, this is left blank, this shows 0. However, where imports were made, the net value shall be shown here and the corresponding VAT calculated at 5% based on the CIF value plus import duty shall be calculated and shown here. This shall be the VAT that is due as output tax on those particular imports under the reverse charge mechanism. However, as mentioned, this is auto-populated and is fixed, therefore cannot be adjusted. Again, similar to the reverse charge in row number 3, the corresponding VAT amount here may be recovered fully based on what it was linked to or what it was attributed to in terms of the supplies made by the entity and if they are a fully taxable person. Therefore, the corresponding amount shall be included within the purchases section as input VAT and would net off in normal basis. Where there is an error or certain goods have not been recorded by the customs authority for whatever reason and is not auto-populated, or there is certain errors made where the values are incorrect, then adjustments can be made to this figure via the box below. Adjustments to goods imported into UAE, this section shall be left open and can be adjusted by the relevant person filling out the VAT return. So this box should only be used if the information that is pre-populated in box 6 regarding the goods imported into the UAE is incomplete or incorrect. And the figures that are entered here can either be positive or negative. The main purpose is to make sure that this top figure is showing the correct balance, and this is the balancing or adjusting figure to ensure that the relevant VAT is captured correctly relating to imports of goods. This is an essential part to compare against internal records or bill of lading documents or shipping labels or shipping documents to ensure that the values, etc., and the conversions have been done correctly. Please note there are certain tariffs that are applied on certain goods, so the calculation method is not easily always understandable or recognizable without diving into the detail much. However, if there is an obvious mistake that is apparent, then an adjustment should be made. This particularly would happen where you're dealing with conversions from different currencies such as US dollars. If you are an agent who imports goods into the UAE on behalf of non-registered persons, it is your responsibility to pay the tax in respect of the imported goods. Therefore, if any of such imports have been excluded from box 6 or imported into the incorrect or appear to be incorrect, box 7 can be used to make those adjustments, likewise for the agents. Box 8 is auto completed again and is based on all the information that has been entered into the column above. So here we can see that the total of the net supplies relating to this entity within the period is 355,000 dirhams. So we can see that the total net supplies is 355,904.75 dirhams of net value supplies within the period. The corresponding VAT amount calculated is 17,795.24. This shall therefore be the output tax liability in this particular period. We then move on to the expenses section. This is obviously very important in order to reduce this liability, as essentially the balance is what will be paid. Here we will capture all the expenses that has been incurred by the VAT registered business within the period, where all the tax points or data supplies fall within this period stated above. So if those invoices, etc., have a tax point within this period, they should be entered here. Again, the first column is relating to the net amount, and the second column relates to the VAT that corresponds to it. This is a sum or aggregate value. So here in box 9 is all standard rated supplies where VAT at 5% has been charged upon within the United Arab Emirates. Below is box 10, supplies subject to reverse charge provisions. As mentioned above, all the supplies that took place above, which were subject to reverse charge and output tax has been accounted for, such as goods imported into the UAE, and those goods or supplies subject to reverse charge provisions, usually referring to services received from abroad. The two values, 110 dirhams in this case, plus if there was any value here, shall be included in box 10 to ensure they net off. As this is a liability and this is a receivable, they shall net off and balance off to zero. This is obviously subject to normal rules, providing that the registrant is liable, providing that the registrant is eligible to get input tax credit on those supplies. The last box, row 11, is also populated, just like above, where it sums up all the relevant expenses and input tax credit within the period. So the net supplies received by the registrant was 10,000. So the net supplies received by the registrant was 10,588.87. This is the net values excluding VAT, and the VAT that corresponds to it is 539, which is again the sum of the two figures above. This VAT value is what will be the net input tax credit. This VAT value is the input tax credit that the business is able to use to offset against its output tax liability. Once the two sections above have been completed, which is the sales values and the expenses values, we then come on to the middle section, which is the net VAT due. The total value of the due tax for the period is going to be 17,795, which is basically the value which is taken from the output tax liability. The total value of recoverable tax or input tax credit based on the expenses incurred by the business is 539.49, which corresponds to the amount here. Therefore, the payable tax for the period, which is the net amount, being 17,795.24 subtracted by 539.49 gives us a net value of 17,255.75 dirhams. This is the amount that needs to be paid over to the FTA based on the calculations made above. Please note that on occasion, a business may have an output tax liability which is less than the receivable amount on the input tax side. Therefore, this will be a net repayable position in that circumstance. However, in this circumstance, which is normally expected by a business, their sales or output tax liability, where 5% VAT has been collected from their customers, and where they are paid out 5% VAT to their suppliers, are netted off. So rather than paying one amount to the FDA and then asking for a refund on another figure, the difference is what is required to be paid over or requested from the FDA. In this situation, 17,255 should be due to be paid over to the FDA by the date above, which matches the VAT return due date. There are also additional reporting requirements such as the profit margin scheme, which can be selected. However, we selected no, this wouldn't apply. If, however, there were certain supplies made which were caught under the profit margin scheme, then this should be reported under this section. At the bottom shall be certain criteria that needs to be completed, such as the person completing the VAT return, the name in Arabic, phone number and certain details, email address, etc., and the date of submission shall be populated once the submit button has been entered. Once the VAT return has been submitted, then the payment liability shall be shown. So as we exit the VAT return, we can also have a look of where the VAT should have to be paid. By going to the section called My Payments, so by clicking on the My Payments section, we are then entered into the section of the website which allows to make us payments. Once the VAT return has been submitted, the relevant liability shall be shown here. So for example, on that one, it was in the region of 17,000 dirhams, which will be stated here, and then you will insert the amount that you want to pay, 17,255 for example, and then you will click Make Payment. Once that has been done, the Pay Now section can be selected, and therefore there will be several options that are provided to the VAT registered individual to make payment, such as using Visa, MasterCard, or the e-dirham cards, or also a direct bank transfer to the FDA's relevant bank account. This is then the completion of the VAT return and submission, and payment has then therefore been made. Please note, you should look out for the submission receipts via email to ensure all has gone through and all is as expected. Once it has been completed, you can go back to the My Payment section to ensure that the liability is showing 0, and within the VAT section, going back into the form 201, VAT returns, again it shows that submission has been made and there is nothing left open. Where there is corrections to be made to previous VAT returns, the Submit Voluntary Disclosure buttons should be selected, and information relating to those adjustment figures relating to previous errors should be provided to the FTA, and that should be done according to which VAT period it relates to. So the basic corrections should be made here. Figures can be adjusted which were previously submitted, and then the relevant figures can be entered of what it should have been. Remember, this form should only be used for errors that are above the threshold of 10,000 AED. Where it is below that figure, then adjustments can be made onto the next VAT return as just a normal adjusting figure to each row. However, here we will clearly state what the actual adjustment is. Here, all the figures that were previously entered on the VAT return at the time of submission can be amended to provide what the actual number or figure should have been, both the net figure as well as the VAT figure. The first box is fixed, and the second box where it says as current can be adjusted and corrected to correct the figures that were above as per the reporting at the time. This can be done both for sales as well as for expenses. The relevant net payable or repayable figure shall be adjusted and be auto-calculated, and payment can be made for that in the normal manner as for a normal VAT return. If there are supporting documentation that are required to give evidence of why those errors have taken place or why those corrections are being made, then that can be uploaded and it should be reviewed by the FTA.